Can you elaborate more, Rocco says, on identifying passive sellers or buyers? Sure. It's super simple. As an idea, it's super simple. As a concept of how to see it. So I exclusively these days use Cumulative Delta, right? That's the only order flow tool that I use. Used to, I also used a footprint chart. So I will say that a footprint chart for some people can make it way easier to see absorption, passive activity, because what's going to happen is you have like this footprint chart, and the bid and the ask are like right here and right here, right? This is like a dome almost, right? But it's what's traded, not what's advertised to be traded. And we've traded 100 at this level and 100 at every level other than what I'm going to talk about. Okay, they're all 100, and we've traded 100 at this one, and we've traded 5,000 to this one. So immediately I bring about the need for like relative numbers, relativity and size of what's traded, because if something's going to be identified as, oh, look, absorption, that's what we call it, absorption, right? Passive activity, if you want to call it that. It's on a relative scale. Anytime there's a trade, there's a passive seller, a passive participant and an aggressive participant. That's how a trade gets done. That's literally the only way a trade gets done. So the only way that there becomes meaningful passive behavior or absorption is if the numbers start to get bigger than normal. Okay, so that's very important to realize. Some people like to see it via footprint chart format like that. So all of a sudden you're looking at this thing and it's ticking back and forth, right? It's going, we trade some here, then we trade some here, then we trade more here, then we trade more there, and then we trade, right? Because there's a lot of trades going off there. And you see that number get huge relative to everything else that you're seeing, right? The same thing can be seen over here on Delta. How do you see it on Delta? Well, you see Delta kind of moving again. You have to establish what's normal, okay? And let's say price is moving similar to that. And then all of a sudden you see Delta do this, right? And maybe price does something like this. So now that we've identified relative movement, let's just look at the prior swing, right? From here to here. Delta was from here to here. Everything kind of checks out. That's kind of normal, right? And now Delta is this far above where that prior high was, right? It's rotated a long ways up off that low. And price, my friends, is not. Price is holding in here. It's not so far off that low. So what has happened mathematically over this bottom forward? Well, there has been strong, aggressive buying, which has not resulted in what would be the typical free-flowing market movement in price. Go back to the footprint chart, right? What's happened? You have a ton of trading aggressively up into the offer. 5,000 contracts go off, right? Here's 5,000. We were at 2,000 Delta. We started off, and then now we're at 7,000 Delta. That's 5,000 contracts. And price, essentially, in my simple example here, actually never went up more than a tick, right? It stayed right where it was. And you see that. You see that in Delta. So maybe even more, I should have drawn an even more extreme lack of price movement for that strong buying. That is not only a passive seller, because anytime there's a trade into the offer, there's a passive seller that does that trade with the aggressive buyer every time. Again, it's a thing of relativity here. When is there a lot of that going on? Therefore, we know, oh, despite all the aggressive buying, there is a passive seller that's absorbing all that order flow. Now, the next question would be around implications, right? And so I typically handle things in a few phases in terms of the implications of said passive dominance or absorption occurring. Under normal times, my read on order flow, okay, we're ignoring narrative, we're ignoring everything else, right? So I may have a read on order flow that's against the trade I'm in. I may not necessarily do anything about that, but what I'm teaching you guys right now is just a small segment of the full trading picture. I don't just trade order flow. I just want to make this clear. I'm just telling you what the order flow read is, not what to go trade based on the order flow. That's a different topic. Under normal conditions, I go with the aggressive activity. Trading in general is about going with strength and fading weakness. That's profitable trading, whether you're talking about price action or whether you're talking about order flow. That's how you do it, in my opinion. Obviously, I come from a certain upbringing in trading that's led me to have that belief system and view about how to do things. But that's what I believe. That's how normal auctions work under normal situations, I believe, right? Why do you think that markets go parabolic? Why do you think that crypto did what it did? Why do you think that an auction at Christie's for Paul Newman's Daytona does what it does? Is it passive activity? No, it is strength. It is aggressive activity. That's what moves markets under normal situations. But not all situations are normal. Sometimes we identify that there is the most dominant participant in that market is absorbing aggressive activity, right? Passive behavior, as you put it, Rocco. So there is absorption, period. We want to look for a squeeze that could be up or down. I know most of the time we talk about a short squeeze, right? That's up. But in this case, look for a stop out of the aggressive participants, right? So when I identify absorption, let's go back to our example. We have price that doesn't really go higher, right? And then we have delta below it, which does something like this, right? So there's a passive seller stacked in here absorbing this push by buyers. I think that the people who were really, really aggressive at trying to get into longs, trying to push a market up, trying to ride momentum, they are the ones who are now going to be potentially aggressively looking for that exit door, right? Like the movie I watched last night, Margin Call. My wife had never seen it, so we watched Margin Call. She didn't really care for it. I like it. I believe that the aggressive participant is typically going to be squeezed because they're like, holy crap, guys. This ain't what we're used to seeing here. We're able to push this thing around. We're able to ride this momentum. We've run into a brick wall here. Let's get the heck out while the getting's good, right? So the price falls and the aggressive order flow kind of meets it and goes too. Now, I go to a phase 3 of reading order flow, right, with absorption and things like that. If there's absorption, then no squeeze. We go back to step 1. Okay, so if this squeeze doesn't happen, so let's draw it again. Price doesn't go higher. Delta is going right higher. We identify it as a passive seller. The expectation is for this price drop, delta drop, stop out. And all of a sudden, you know, delta comes down very normally and price comes down very normally with it. Right. And then again, we see the really, really strong buying, and maybe there's a little bit more absorption or something, right? This now turns into a situation where I tend to just want to go with these buyers who are not giving up, and the sellers were unable to run their stops and squeeze them out. I tend to think that more times than not, that's going to lead to the aggressive participant ultimately winning. Because what is this? It's a battle. You have a immovable object hitting an unstoppable force, right? We don't know which is going to win, but these are my guidelines and my model for how I typically go about having a read on order flow. So I just took you to level 10 of doing this. You asked about level 1 about, you know, identifying passive buyers or sellers. We very quickly covered how to do that. And this is kind of what you do with it over time and under nuanced and complicated situations where different things are happening, different things are not happening.